Hey VV Nation, Glenn Tompkins here on our YouTube channel, Senior Instructor, and I've got a great video for you today because it's pertinent and it's going to affect everybody's pocketbook. Is it time to buy oil? Well, we all know that oil is a commodity and we all need it. Cold season is coming up and the inventories are going to play a major role in the price of oil. Remember, we went into our strategic inventories in order to lower the price of oil, also to lower the price of gas. And now oil is trading at under $80 a barrel. And those people in OPEC who produce all of that oil probably are not liking that so much. Rising oil actually means rising prices at the gas pump. It's going to happen again, unfortunately, but that's a product of the cost of oil going higher. And it's all part of the inflationary story. We all know how bad we are in the inflationary space. And we also know that the Fed is doing what they need to do to go after inflation by raising interest rates. But I've been saying over and over again that oil is still a good long-term play. It's just been a tough place to be in right now because we artificially lowered the price of oil and we went into our reserves and all of those different things. Another story for another time. The question is this the right time to start to think about buying oil right now? So with that, let's go look at a couple of stories that I have to keep our eyes on. And this is a story that's been around for a while. It's been around since June 13th. But I think it has got a lot of great pertinent information in understanding the move of oil that we're going through right now. The overview says the price of oil is the most important factor in determining gasoline prices. Moreover, the relationship between the price of each is highly correlated with causation, meaning they tend to move in the same direction for a good reason. All right, so we start off by looking at the producers. Globally, there are two groups of oil producers categorized as OPEC and non-OPEC. OPEC is comprised of 13 countries and Venezuela. All of these are national oil companies or NOCs and operate within central coordinations. NOCs are focused on employment and revenue that impacts their country in a broad sense. Okay, OPEC producers account for about 40% of the total global production. Let's scroll down a little bit. Production capacity and focus. OPEC members are focused on bringing value, employment, and revenue to their country, while non-OPEC producers focus on increasing the shareholder value profits. Because each group has a very different focus, the issue of capacity differs. For example, in the IOCs, with the focus on increasing shareholder value, they typically operate at full capacity, meaning there's very little room to increase output. The NOCs usually do not operate at full capacity. Therefore, more oil, if were needed, OPEC members could increase production. So a lot of people always say, well, if OPEC is the big dudes, why don't they just open the spigots? Because they are controlling how much they want in regards to the amount of oil or the price of oil and how it's going to affect them in the pocket. All right, so that was a couple of things here. Crude oil inventories, which is a big thing for us. We had strategic inventories that we dipped into, and now when the cold month's coming, it's going to affect us adversely. Thus, it's going to drive the price of oil higher. If we don't have it to be able to depend on, it's going to be a big thing. All right. My next story is talking about OPEC considering an oil price cut. Remember, they're the ones that are not always at full capacity so that they can move around how much they put out or not put out. And a cut is going to definitely raise the price of oil, is going to make it more expensive. Here's a look at what we're watching on the street. The world's top 24 oil producing nations are considering an oil output cut, according to a report from Reuters, in what would be the biggest moves since the start of COVID pandemic. OPEC Plus, which is comprised of 14 nations, and OPEC plus 10 other OPEC members like the U.S. and Russia, are all set to meet October 5th in person, which is tomorrow. According to Reuters, the group could be eyeing at least a cut of 1 million barrels a day to help the global economy. All right, so the big cut that puts less oil in circulation. So the demand is going to be still high, but if the supply is not there, oil prices are definitely going to go higher. All right, with all of that, let's go back in and let's take a look at what's going on in the market. So I'm going to tell you that the big move in the market, energy has been the biggest mover. Energy and oil. As you can see, for 2 days in a row, the market's moving higher. Big candles on our market timing graph, very little wicks at the top, which means that this is confirmation of a strong move to the upside. The 3 and the 8 have crossed on the composite. We're still overall in a downtrend. Let's break this out to a 3-month graph. Overall, we're still in a downtrend, but this move, if we can get past this level of a downtrend, could be a sustainable move for a little bit, but we'll see. We notice here that it did go back above and fell back hard. So we're still in a downtrend overall over the last 3 months, but let's go see if this move can bring anything to the forefront. So with that, I've got some stocks that I want you to take a look at. There's 10 stocks as well as 1 ETF, Gush. But notice that today, every single one of these stocks are up in excess of 2%. Let's take a look at the whole group as a graph. I'm going to go down to my watch list average of all 11 stocks, right click. I'm going to view the graph of all of them. Here is a 4-month, let's go put it on a 6-month graph of oil. Remember, all of this time, it's been a tough play. I still thought that long-term we're going to be all okay. This is when prices of oil and gas were going up. We pulled back, broke to a level of support, but look at this. Nice open day on this group of 11 stocks and the 3-8 cross. I do have headwinds on this group sitting at a price of 72.74. If we can break through this level of resistance, oil could definitely be on the rise and you can have an opportunity to make some money on the stocks. So here's the stocks that I want you to take a look at. Stocks like WTI, Matador, Devon, Valero, Marathon, Canadian Natural Resources, Chevron, Exxon, Vermilion, Occidental. How about Warren Buffett? Still been buying more and more of Occidental. And if you want to play the whole space, you can play 1 ETF, Gush, and all of these. And notice that Gush is the biggest mover in my list today. Overall, if you don't want to hone in on any one stock, you can do it this way. Folks, I'm telling you that right now, I still think that we're in a little bit of a relief rally. Let's go see if the market can keep moving higher. Let's see if we can break out on the market timing graph higher than that downtrend. The rally is the rally, and you take advantage of it. I think that right now you have an opportunity to make some money on some oil stocks, especially knowing that a big cut is coming out of OPEC. It's going to drive oil higher. Folks, you have an opportunity to make money in these stocks. With that, folks, this video is over. And until the next time, see ya.